What's going on, guys? Give me 1 second. I just grabbed my microphone and ripped it off the stand. So we're off to a good start. I don't know how I did that. 1 second. What the fuck? Amazing start. I will put my camera on in a second so you can see what I'm doing. I'm sure this thing can actually just hang, but... Okay. Can everyone hear me? Loud and clear? That should be fixed now. Alright, let me turn the camera on so you guys can see what I'm dealing with. Good afternoon. Alright. I just touched this microphone and it just fell. So, anyway, what's going on, guys? It's lunchtime. It is, you can see I still have the stencil all over my arm from the tattoo I shared yesterday. So, I haven't streamed in a long time. Hopefully the sound is good. We'll get started in a minute. Let some people roll in. The algo is probably not favoring me right now because I haven't been consistent. Is this plugged in? We're good? Cool. Background noise isn't too much. Give it a minute or two. There's usually a little lag. Got my Friendtech phone out. My regular phone. I was against Friendtech from the start because I just felt like, I don't know, I don't like to attach my identity to too many things in crypto. I mean, I'm KYC'd. I pay my taxes, but I don't know. I'm always kind of weirded out about letting something have permission to access my Twitter and then connecting a phone number to anything. So I used a burner phone that I have. Okay. So, it's been a long time. I don't remember the last time I streamed. Yeah, I'm going to lower the music a little bit. We'd actually just get rid of the music. Cool. I don't remember the last time I streamed, honestly. It's been quite some time. I mean, I've said since the beginning of the summer, since May, that I take the summers off. I mean, I don't take them off entirely, but I don't really start working, quote unquote, until after Labor Day. So Labor Day this year is I think it is September 4th. Mm. It's the first Monday of September. So I think that is the fourth this year. But that's when I start really starting to pay attention and get on my grind again. Anyway, so I appreciate you guys dealing with the fact that I don't stream consistently. I always say I want to stream consistently, but then I never get around to it. But once Labor Day rolls around, we'll try to get back to 2 to 3 days a week, which I was doing for a while. I was doing that for like 2 to 3 months and then just fell off again. But I have a new little one and I have a life outside of the market and the weather's nice. So I am outside and enjoying myself touching grass. Anyway, before we get started, as a reminder, nothing that I say in the stream is financial advice, strictly for entertainment purposes only. We're going to try to keep it as entertaining as possible. The market always offers something to laugh at, offers us some kind of material. This market's it's a joke more often than not. But anyway, none of this is financial advice, strictly for entertainment purposes only. Just my opinions on the market, how I look at the market through my lens, and that's it. I don't want you taking what I say as gospel and, go and changing any of your positioning based on my opinions. I know that there's inevitable at some point that someone's going to take something I say and run with it. But I change my mind quite often. I change my mind frequently and very quickly. So just keep that in mind. Anything I say during a stream, it could be stale in an hour from now. It could be stale a day from now. It could be stale a week from now. You never know. And I am not consistent with keeping up on social media to remind everybody that my opinion has changed. Okay, so shout out to the sponsors of the stream. The stream is powered by Bybit. I've been with Bybit for a really long time now, obviously. I think Bybit's the best exchange currently. You never know who's going to be in the number one spot, but I think Bybit has done a really good job of staying out of the number one spot in terms of being notorious and known for the wrong reasons. And obviously, I'm talking about Binance. Who knows what's going to happen with Binance? It feels like the other shoe's waiting to drop, but I don't know. It feels like things pick up in the media and something becomes like the main story in or the current narrative, and then there's a distraction, and then we stop talking about it. And for a while, Binance was like one of the only things talked about. But there's always another four coming, right? And yeah, I think that does it for the formalities. So I haven't streamed in a while, and I just want to put it out there to the chat. If there's anything that you guys want me to touch on, any current events, anything that you would like to hear my opinion specifically on, I have some things that obviously I want to talk about. I want to talk about jujitsu. I want to talk about, no, I'm just kidding. I want to talk about some things that I think are relevant that happen to be coming up this week. So let's change the screen real quick. Make sure that we have everything set up properly. CL, NQ, ES, BTC, Velo, Benzinga. Okay, so one of the first things that is coming up is after the close tomorrow, and that is NVIDIA earnings. So if you guys remember last NVIDIA earnings, you can see on your screen, actually, this is Benzinga Pro. Last earnings were a very significant beat. I forgot how much NVIDIA had jumped, but I should remember because I actually bought calls into earnings, and that was my best trade this year. I think that was my best. It's either, well, definitely in legacy markets, long NVIDIA calls into earnings. Last earnings was my best trade, in terms of money, at least. I wouldn't say that it was my best trade in terms of being thoughtful and really doing much more besides punting. Buying calls into earning, buying options into earning is usually never a good idea. Usually you get some kind of volatility crush after, and implied volatilities are jacked up into earnings. Obviously, there's there's a ton of volatility that's priced in leading up to that. So a lot of the times you get kind of creamed after the release. Sometimes you get lucky. right? Depending on what kind of regime we're in. But that paid off handsomely. And you could see last earnings below, estimated earnings per share, it was 92, and they were up 18%. And then estimated revenue was, what was that? That was 6.52 billion, and it was 7.19. So that was a big beat. Why do I think this is important? This is after tomorrow's close. It's important because we'll see whether or not the AI narrative actually has any substance, or right now at least has legs. I've said many times before, I think AI is going to offer one of the most significant bubbles in history, but we haven't seen that yet. I think we're really early to that, honestly. I think you're too early to that. So you could be too early, you could be too late. And I think that we're very early to that. I don't think it's the kind of early where if you just buy something now, it's a guaranteed win. Chances are that it just goes through the same Gardner Height cycle that we've seen crypto go through before, where there's like a ton of promise and speculation about what is to come based on this promising new technology. And then people realize that the tech isn't catching up to the hype, and there's there is a lot of wind that's let out of that. And then finally you start to see some building and some things come to market that actually have substance. And then we see, who the clear winners are and who's actually running in the race. So AI, I think, is very early. We don't even have any IPOs around it yet. There's really a couple plays around AI. Obviously, the ones that have benefited significantly are NVIDIA, Microsoft. I think that Apple will as well. And then we have, AMD, there's other companies also that trade in the NYSE and are stocks that are good AI proxy plays. But the point is, I think that we've seen a lot of that priced in, and there's not really a whole lot to show for it yet. I mean, we have ChatGPT, we have some cool software when it comes to creating images, and I know there's obviously AI is going to transform the world. But the point is that I think a lot of things are inflated going into it. So what are the chances that NVIDIA really beats on earnings tomorrow? Again, the same way they did the last earnings. I think it's unlikely. So I think that we could expect that the air that we're seeing get let out of this is going to be for some time. And we're just going to go through that same hype cycle that things go through in other markets as well. So again, we saw that with crypto as well, and that is the Gardner hype cycle. So this is something I think is worth paying attention to because NVIDIA has been responsible for a significant amount of the upside we've seen in indices. Microsoft as well. So we'll see, how other stocks trade around NVIDIA's earnings. I think that'll be pretty telling. So that is after the close tomorrow. Another thing that's coming up this week is Jackson Hole. So Jackson Hole on Friday. That is this Friday, right? That I'll just double check because I'm part-timing right now. As I said, I'm part-timing. So August 25th, Powell speaks, and the Jackson Hole Symposium is that day. So that is going to offer hopefully some insight into whether it is higher for longer or whether or not we have some kind of, dovish Powell on the podium that day. And the reason I say that is because you can see the rates are moving up. I think macro is becoming more relevant again. I think macro is always relevant. So whether or not macro affects short-term price action is one thing. We've obviously seen that correlation abated for a little while. So if we just look at something like the NQ, and I've said many times before that I think crypto kind of trades like tech. If we look at the NQ and then we'll just use a line chart and then we'll throw over BTC, you can see there's obviously been periods where, and I think the NQ outperformed BTC at this point this year. Don't quote me. I think they're pretty close. There's been periods where the NQ has moved up, BTC has either drifted down, or BTC has been drifting up or moving up sharply, and the NQ hasn't followed NQ, or we could talk about the ES as well. Just equity index futures or indices. It doesn't have to be the futures product. You can look at the SPX, obviously, and the NASDAQ or the Russell as well. But there's been periods where there hasn't been that short-term correlation that sometimes you get, right? Especially this was more prevalent when there was a lot more TradFi desks that were trading crypto, and now we've seen a lot of market makers have left, and a lot of those TradFi sort of fast money types have left as well. So sort of the enforcement of the correlation isn't really there as much as it used to be. But I think zooming out, there's no way that if the macro were to change, and this is not me calling for the macro to change. I already called the top in the S&P. I don't want to pat myself on the back, but I guess how else do I communicate it? I said this is going on almost a month now. I said that I think we were looking at a top in the S&P, at least in the short term. Momentum was drying up, and that turned out to be right. But there's many times that obviously my calls turn out to be wrong. But if the S&P were to continue to move down, especially if it moves down sharply, the NASDAQ as well, there's no way that BTC and ETH would not get harmed in the process. I think this is really important because, again, and we started by talking about Jackson Hole coming up this Friday. So if it's a dovish stance, that's great. If there's any talk about, I don't think there's going to be any talk about this, but the target inflation number being higher, that would be good for BTC. But if macro changes, right, and we start to see that rates are moving up, the dollar's moving up, and equities and risk are starting to lose their footing, again, that's not going to be conducive for, that's not going to be something that is conducive to a healthy crypto market where we see continued price appreciation. I think this is important because this will really matter, in my opinion, around the halving, right? We're all a lot of people, myself included, they look at the halving as one of the strongest narratives in crypto, one of the ones that produces sort of the most significant flows that a lot of people outside this market are aware of as well. So you want this to happen in a really friendly environment for risk regardless, right? So I think we want to see that equities have their footing around that time. And this is like into 2024, obviously. But I should probably just end this macro conversation because we don't want to go too far down this rabbit hole. Either way, Jackson Hole coming up on Friday. So Powell is speaking. I think that's at 10 a.m. You could just check out the crypto calendar at Forex Factory. And then we also have NVIDIA earnings tomorrow as well. So we're going to look at, during this, I'm going to obviously touch on a few things, but we're going to look at BTC's chart. We'll take a look at the S&P. I'm starting to look at other things as well, again, just because the crypto market, in my opinion, I'm not interested in trading on-chain, things that you're trading 5K positions. That's great for people. If you have a small bankroll, that's phenomenal. I've seen that a lot of on-chain pairs, a lot of the on-chain narratives, they trade really technically, so that's great. There is a larger amount of ways to execute now rather than just using Uniswap. And if you're someone who trades with a smaller bankroll, yeah, you could absolutely crush it trading on-chain. I'm personally not as interested. I think there's a lot of games that are played on-chain. I think it's a lot of a couple people getting really good fills and then like 99% of people incurring the 90% drawdown. So I think there's a lot of pump and dumping going on by influencers. I've seen so much has changed, I feel like, in the last couple months in this market. So between the first thing that people could probably think of is like when Hasaka took the Rollbit deal, that shocked a lot of people. So it's a casino, obviously. I think Rollbit is a promising, Rollbit was one of my bolder calls going on 2 months ago. Just because it was so hated, I figured that it was under allocated to. But then we have a lot of like super small cap stuff that suddenly has been shared by. It's just like everyone has carte blanche to share small caps, and it's not even like during a bull market there's this kind of feeling that anything goes, right? But there is still there's a line you don't want to cross. Like if you're a person who has over 100,000 followers, even listen, it doesn't even actually matter if it's 100,000 followers, 50K followers. There are accounts that have 25,000 followers, but all of their followers have them on alerts, and all of them are following them over the edge, right? They're just like absolute lemmings. So if they say jump, people jump. But there is sort of this like kind of unspoken code that you don't you don't share below a certain market cap coin. I know during the bull market, I was in things like Shroom and G-Swap, and I still hear things. I still get shit about this. I actually don't get a lot of shit, so I feel like I've done a good job because I've been very upfront with how I'm a trader first and foremost. But people are sharing, like, no joke. I feel like wherever I look, there are large accounts sharing things that are like 250K, 500K liquidity, sub 1 million market cap. And they're sharing them and saying, they're like applauding the performance of the coin after they share it. And it's like, a fucking course it's going to 2x. Like, it takes 10 people to buy for it to 2x, right? So there's a lot of that. And then you have Friendtech, which is basically like, it's basically like paid groups that everyone has. But anyway, so we're going to talk about BTC. We'll talk about some charts, and we'll talk a little bit about Friendtech. One thing I want to talk about real quick, though, is, so I made a couple announcements in the last 2 months. I am on the SyncQuote team now. So I've shared this many times before. You could use the link Trade SyncQuote. I create vanity links, so it's easier. But I'm not just sharing a ref link for SyncQuote. I'm actually on the team. So if you look at SyncQuote's Twitter page, for example, they follow 11 people. They don't follow any influencers. I'm actually on the team. So if you ever have any questions about the platform, if there's any ideas that you have, if you ever have any issues, you could come to me. If you want to, build some kind of position OTC, let me know as well. So this is a decentralized options exchange that uses RFQ. So request for quote. There are a lot of things coming with this in the next month that I can't get into right now, but it's a fucking awesome platform. The difference between this and trading with perps is that you cannot get liquidated, right? So you cannot get liquidated by buying a call or buying a put. So it allows you to have that directional exposure without the exposure to that path dependence that comes along with using leverage on a futures product. Path dependence meaning if you are 100x long something, you cannot have that move more than 1% beyond your entry point, right? So your maximum adverse excursion is limited. And obviously that'll increase depending on the leverage you use. But you might have the idea, right, that price is going to move up and to the right, but it moved too much up and down on the way there, and you got liquidated. So by buying options, and you could sell options on this platform as well, there are just some perks that you can access by using futures products. Not only that, you're taking bets not just on, there's just a lot more ways to express yourself, let's put it that way, by using an option rather than a future. You could take bets on, non-directional bets on volatility, whether that's volatility increasing or decreasing. Obviously, people have been really getting away with selling options lately. You could, take directional bets, but sell options against that to finance that position. But this is a decentralized options exchange. It is the #1 decentralized options exchange right now. And the link is below if you guys want to sign up. And what I will say is I am technically shilling this, but again, I am partnered with them and I am on the team. But for you guys, if you refer anybody, just set up your own ref link. If you refer anybody, you get $100. So go ahead and check out that link and check into the platform. I know options are a little bit over everybody's head, but anyway, I'll be mentioning this a lot more, and I share a lot of trades on this now as well. Okay, so first things first, let's talk about BTC. Do we have any questions in the chat? We're like 20 minutes into it. Let me take a look at this real quick. So I think honestly, I think we have a lot more sideways to go in this market. I don't think we're anywhere near to the beginning of a bull market unless you consider the bottom of the market the beginning of the bull market. I get that. I think that's an interesting. I think that's interesting mental gymnastics. But personally, the bull market has, my opinion, bull markets have a lot more energy to them. There's the implication that there's more money coming into the system. So I think that yes, the bear market is coming to an end. I think that there's a good chance we've seen the bottom zone already. I always say zone. I never say a level, so you're never going to hear me say we've bottom ticked. I think this is the bottom developing. But I don't think that we're looking at up-only prices in the near future. I think that the market got really excited around that prospect, but clearly a lot of short-term traders came into the market. It looks like a lot of the longer-term traders that would like to be positioned have yet to position completely. So we're seeing this sort of weak-handed effect of that in real time. And obviously a lot of that was due to the ETF and BlackRock and the idea that this was, I guess, going to happen sooner than later, which I think is honestly preposterous. So I think that we have a lot longer to go. As I've said, 2024 into 2025 is probably when we're looking at sort of ideally when we should see the bull run really begin to manifest. When I say, is the beginning of a bear, so the bottom is where the beginning of the bull market begins from a bottom standpoint, but from the standpoint of like new capital coming into the system, sort of an appetite for risk taking, we're definitely not there yet. And one of the things that I've been sharing is if you go to sort of like, if you go to any one of these, I should say specifically, you could use DeFi Llama, any one of these platforms that will give you either on-chain data or stablecoin data. DeFi Llama is a great website. Not shilling them, not sharing a ref link or anything, but it's what I use. You could sort of just see that nothing had. It said sort of twice in the last minute for no reason. You can see that just stablecoins alone have been on. I said this the other day. I said. They've been monotonically negative. So I've said in the past, I've used the phrase monotonically positive. Basically just means up, plateaus, but up only. So no real move backwards against the trend. That's not necessarily accurate for this because there have been sort of pops up that have cleared, prior highs along this if you're doing sort of TA on this structure. But stablecoin market cap pretty much just down only. So, I think there's good reason for this, right? I'll keep my capital in this market when there isn't a better deal somewhere else, right? In the past, maybe it made more sense for this to not change as rapidly, right? When it was tougher to get in and out of this market or to like onboard and offboard. But now it's not difficult at all. If you're KYC'd at Coinbase, I can withdraw and put in money into the market instantly. So I'm pretty sure I haven't added money into this market from the outside in a really long time. I make my money in this market and reinvest. But in terms of withdrawing, my withdrawals hit my bank instantly. And there's really not much friction coming into it as well. I think that there's friction in terms of like if you deposit to Coinbase, it might take a certain amount of days for clearing before you could withdraw, but you're able to build a position either way. So the point is, there's really not much friction in that process. So if you are sitting in a bunch of stable coins and you see that yields are jacked up, like why aren't you going to earn something on that, right? On your cash, whether you're buying treasuries or something else, or whether you're buying long-term treasuries, short-term treasuries, whatever. The point is that the opportunity cost is there, right? So it hasn't made a whole lot of sense to keep cash on the sidelines. I'm sure, plenty of people do, right? They don't buy treasuries. They haven't been taking advantage of, that risk-free rate. But anyone who is smart and a more sophisticated player in this market most definitely is. So stablecoins have been on a consistent decline. This is a pretty good barometer, in my opinion, of the overall level of this capital coming into the system. And at least if it's down only, that things aren't necessarily there. It's not a market that is looking like it's ready to rip and roar. So this is something that I think is not going to turn on a dime. I think honestly we need some kind of catalyst, and whether that's a fast catalyst, whether that is something like, say for example, an ETF announcement overnight, or just kind of out of the blue, or a major decision by the SEC, or major, some kind of, what else was I going to say? Another example. Let's say something from the Fed, whether that is like the target inflation rate being raised rather than being 2%. There's a couple things that might happen that might really perk this market up. But I think that the more likely outcome is the positive catalysts are still a little further out, and we'll see things like slowly build up. And that will be closer toward the halving. And my point earlier in the stream was, cross your fingers that the environment is good for that, because I don't think that, I don't think that we're promised it. I don't think it's guaranteed. I think that if you look at prior halvings, again, when I said earlier, we are still correlated to the overall liquidity in markets and the overall healthiness of other markets as well, namely talking about traditional markets. We're just talking about if you want to use something like the NQ or the ES or the S&P. During prior halvings, they were moving up. They were doing well, right? Markets were healthy, and it would be a shame if we went into this halving and we didn't have sort of that sort of good environment for risk taking, because I don't know. Again, it's not guaranteed. It is a reliable narrative, but it's, again, a very limited sample size. And yeah, so I think that my expectation is that, and we'll get down to shorter term stuff in a second. My expectation is, honestly, this thing kind of continues the way it has in the past. I mean, I think there's a lot to be said for symmetry in markets. And you know who I realize says this as well recently, and it's been something I've been saying for a really long time. Shout out to Pentoshi as well, because he has mentioned this also. I think that markets do display symmetry. So if we look at, for example, just like the all-time index, BTC, where we are with respect to prior cycle highs and lows. And I don't care what anyone wants to say, so I will get rid of some of this stuff real quick. The all-time high to me it's a technically objective designation. So there's some people that say this is the all-time high and this was due to 3AC and FTX. A fucking all-time high is the all-time highest price. I don't want to hear anyone argue that. It doesn't matter how we got there. It is literally the all-time highest price. You're going to tell me that this was just one counterparty moving the market up billions and billions of dollars? All right, maybe they were responsible for a lot of it, but that's our market, right? That's the all-time high. If we look at this and we just do sort of a where we are now, right? So 93 bars. This is a weekly. So this is going on 2 years. And then we do the same, just roughly even. So you can see where we are, right? I remember back. I remember this period, right? I very much remember October 4th, and that is a few weeks from now, because that was when I got married. But and I didn't give a shit about the market, honestly. When I think back at I remember I was thinking about that recently. I was like, holy shit, that was when October 4th was. I think that was that was after this break. Either way, I just was not thinking about the market or prices at all. Back then, the same sort of energy was in the air. This was, consolidating before the next leg up, and we were going to, take out the all-time highs and begin the next bull market. And it takes much longer than that, right? So I would expect that if anything were to occur, that, and I know I'm going to, call to bear for this, but I think if anything, the more capital you have in a system, the larger a market is, the longer these things take to play out, right? More money has to exchange hands. It's not like the market's fucking cornered or anything. So I think it's more likely that it takes longer to play out. I don't expect it to take much longer than previously, though. And as I just said, honestly, I wouldn't completely hinge around the idea that it has to do the same thing it did previously. Like, we're really making a bet that the halving continues the way it has, but keep in mind context is completely different. High rate environment, dealing with inflation, not the same environment in terms of behavior, in terms of risk taking, and how markets are in terms of health. So context is just completely different. Now, we have a lot of time before, we have a lot of time for things to change. But if we just look at how long it took for us to break the all-time high after, we're looking at around 63 bars. So you're looking into the middle of, I think, 2024, right? And again, I think it's reasonable to expect that this kind of continues in similar fashion. That's good. That's like fourth quarter 2024. So the difference is if and this is something that I've said many times. This was COVID, right? This was a black swan. I think the market was basing out either way, and this might have resolved faster, right? So absent this big black swan, we were going to be basing out, and I think we were still going to attack the all-time high regardless of all that stimulus. Would markets have been as crazy? Probably, definitely not, because people were just getting helicopter money. But do we have to have the same kind of massive drawdown? I don't know. I think that it is likely that we have lower prices to revisit, but yeah. Anyway, I don't want to go too much into this because this is kind of like I don't like to make predictions like this on the high time frame too strongly because anything could happen, right? No one saw COVID coming, but the whole point of that is that I think that we have some time ahead of us, right? I think that you have to be patient. All right, so let's get to where we are right now. Sorry for all that intro stuff. Sec. Okay. All right. Okay. So first things first. This was larger than FTX, right? In terms of open interest, in terms of liquidations, this move right here. Now there is a significant amount of open interest in the market. It wasn't necessarily obvious in perps that the market was overheated, but and this is something that I've said many times before. When the market is assumed to have bottomed or is bottoming, you're going to see more long-term positions taken in products that are suitable for those kind of views. So rather than taking long-term positions in perps that have a degree of decay to them, because over a period of market trending higher, you're going to see that carries. You're going to be paying that interest rate component in terms of positive funding. That is going to add up over time, right? If you annualize that. If you want to take a long-term position, it makes sense to look at sort of the longer dated linear futures contracts, okay? So the quarterlies, for example. So they don't have a funding rate, right? Because they are going to be trading in contango, or they'll be trading in contango or in backwardation, but in bull markets and in upward moving markets, they're going to be trading at a premium to the spot market. And you will see, obviously, that close as we get into expiration, but they will be trading at a premium. So you're going to be paying that premium versus buying the spot market, which will be, at any point will be either a lot or a little bit less. So you are paying a higher price, and depending on how far out you buy, I mean, this is not really relevant for crypto because there's not much to the futures curve, or there's not much to futures term structure. It's not like you have futures contracts that go really far out like traditional markets, where you might take a long-term view in something, but you might buy the wrong portion of the futures term structure, and it might not appreciate at all depending on what contract you bought. Either way, a lot of positioning looks to have built up in those products rather than perp. So if you look at, for example, this is just a 3-month annualized basis, right? You can see that basis continued, okay, and price remained flat. So prices this is going from May to August, obviously continued upward, but there was a lot more sideways and drift downward than as indicated by futures basis. So this was just showing you that the market was continuing to trade at a premium further and further, even though price wasn't reflecting that. So that positioning was accumulating, right? And I think that, and I've said this a few times before, I always say that just, you'll hear me frequently say, like I've said this a few times before, because if someone wants to learn more about something that I've said, and I don't go far into it, you could take like whatever I reference by saying, I've said this a couple times before, just take that and either use that in advanced search in Twitter or search the Discord for it, and you'll see more things pop up, right? That might give you like a more comprehensive explanation of whatever I'm touching on, okay? But what I have said before is that the market tends to let go of positions due to boredom. So you have a lot of positioning that built up. you had a lot of positioning that built up for a good reason, I think, right? Long-term views based on ETF coming to market, which gives traditional players better access to this market versus buying like ETPs or CME futures that trade again at a premium and are thin. So because you're trading something that's at a premium and you're buying a futures product, you have to pay that roll yield, which is going to mean you have to buy up the curve, right? So let's say you buy this month's contract and BTC is, for example, 30K, and then the next month's contract's 30,500, and you sell out of this month, you roll into the next, you buy 30,500. The point is, in a market that's trading contango, you're going to be paying that difference over time, right? You're going to be you're going to be incurring that that roll yield. So, and by incurring, I just mean you're going to be paying that. So I'm repeating myself now. Great. So meaning for long-term views on this market, there's really not I mean, you could be like one of us, right? You could come into this market. But in terms of traditional products, it's not a whole lot there for you, especially for anyone with like any real size. And also the ETF gives credibility to this market, right? If BlackRock has an ETF, like that's a big fuck you to anyone who ever had an opinion about crypto being, or BTC at least being significant or at least relevant or legitimate. So a lot of that positioning, I think, was stale, was late, people buying too high. And anyone who had accumulated that position probably doesn't have the strongest hands. And you see these flushes occur after very imbalanced moves. So where we are now, we're at the yearly VWAP. So it's just an idea of like where risk average out for this entire year to date. You can see for the last, they're quarterly profiles. For the last 2 quarters, like going back to April, we haven't really done anything. So we traded right back through April. We traded right back through last quarter's value area, right? So the last, that's going back June, May, April, so 3 months. These are 3-month period profiles. And we're at that yearly VWAP. We're sort of at the lows of this. And I'm just kind of stressing we're at the lows. We're at a key level. It's a dynamic level. It's a VWAP, right? So this must be a great area to buy because, it is also on the back of an extreme amount of liquidations, a big flush in OI. Like these are actually all things that I would really consider to get in position, right? I talk about this often, like multiples volume, big changes in positioning, right? Large imbalance moves, okay, into key levels from a distance, yada, 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 sort of setting up sort of the perfect support buying opportunity. Now, one, depending on what exchange you're looking at, so if we look at Binance, we did take out the low. If we look at the spot markets, we didn't. But nevertheless, we are still sitting at, we're back at sort of range lows and retesting this prior range high. Loosely though, right? It's a zone. So it has all the characteristics of something that would really normally, I would just be like, yeah, absolutely, I'm going to buy this. If it wasn't for the fact that macro hasn't necessarily looked great, right? Equities have been experiencing a good amount of pain up to this point as well. Volatility was really compressed. Like this was I think the most compressed, the lowest volatility had been. If you look at like DVol or historic volatility, it's, if not the lowest, if it's one of the lowest periods of all time in BTC's history. So normally after something like this, when you do get an expansion, it's normally the case that is, if it's either trend changing or it is trend starting. So whether it's a reversal or it's a beginning. For me at least, and again, I know a lot of people are buying this dip and kudos to them if it works out. A lot of the times, in my opinion, when something happens like this and you have like a day like this that is a record day, there are plenty of times when it's a great dip buying opportunity. But for me, it's more important that it's coming off of this kind of compression. So it's not like it was like part of a violent sweep. It's not like it was a brief period of time had passed and then we had a violent plunge below low and then the market has wiped out of the adequate amount of longs that we would look for continuation. This to me is possibly signaling the beginning of a larger trend change. And again, it's at a key level. I just think that it's more likely now that we come out and fill out these lower prices. So one of the things that I would look for, though, honestly, is we have this single print gap. So we have this sort of imbalance move untested around, what's that, like 26.9, 27 region. Could the market come back and trade to this level and then continue down? Yeah, absolutely. So this is kind of a level where I'm paying attention to. If we accept above 26.9, 27, and we start to sort of gather our footing there, then yeah, I'll play some kind of gap fill to the other side of that region. So to the other side of the region, I mean the level that we came from. So right around 28.5, 28.6. I already closed out my short. So I was short from up here. And for anyone who's doubting that, I posted on Twitter many times before. I was kind of patting myself on the back after, like a jerk. But I, in my opinion, this is more likely to continue down, right? So if we do pop up into this gap, I think this is more likely going to be the cutoff point and would offer sort of another rally to sell. But if I was going to bet on what happens in the near future and bet on it just verbally, not actually take a trade around it, I think this is more likely to kind of drift sideways and then continue to put in another leg. Wicks like this don't often get left behind. So example back here, sort of this kind of, large plunge. Markets look at a wick like, or people look at wicks like this and then think that this is, for example, like a really good sign of demand. Really, it's just a really thin imbalance move. Okay, so we covered a gap, blew out a bunch of longs, and more often than not, this just does fill out. So you'll see the market trade back down through this gap, and then we'll see if that demand is really there. So, what that means is we kind of retest at least, I think, 25 again, and then we'll see if we get a response around there. And I'm not hinging. This is not a really strong belief of mine. I'm not taking a position around this. I just think it's more likely to happen. So I think that wick is something that we'll probably fill out. And this high time frame rejection at this weekly level, looking at the monthly right now, I think that, yeah, we are going to trade lower. I think we are going to trade back down towards 20. Honestly, the next area that I would look to for a major response would probably be around this 23 region. So that is one of the highest volume regions within this entire structure. So if we go back to like last year and we go back to sort of the beginning of that initial range that we formed, and now we've been retesting, and now we're retesting for a second time. That is this is the sort of period profile for all of this. That's one of our high volume regions. We have a low volume area that we're kind of hanging out between right now, so it makes sense to kind of fill this out a little bit more. We have a little bit of a shelf and ledge between 21.8, 21.9. And then if we start accepting below 22, if we start accepting back down towards these lows, I think it's possible that we actually fill this structure out again. This is without a COVID-like catalyst, I think it would be really tough to, but I'm definitely not saying that it can't happen. So there's a lot of people right now that say that things like that can't happen, but I think that honestly we're more likely to see 25 again, and then we'll see what kind of response we get there. And that is, for me, that is kind of the make or break zone. What happens again at 25, right? So the reason that is because we have sort of this high time frame level that was significant almost for a year in terms of acting like resistance. We flipped it, retested it. Now again, testing it for a second time really violently. But that was a prior range high to a much larger carve out. So I got rid of that. But yeah, over time, I think that when you accept back into these ranges, it takes some time, but you more often than not retest the more significant levels within them. So that is, again, a loss of like 25. I think it takes you back down to 22.9, 23, and then we'll see what happens from there. But in the short term, listen, I'm not really focused on BTC at all lately. I don't think that I think that this thing had a big move, but it's just falling right back into sort of this low volatility compression. The trades in the short term, again, I think are around these singles, so in this gap, and then something like, honestly, because of this compression, so you have, if you look at the last couple of days, you have a pretty tight balanced area forming. So we have value overlap, value overlap, value overlap going on. This is going on 4 days. We have no inside days, but this is tight enough to just bracket. So I mean, honestly, so I could even see this being taken. I mean, if you really want to take a BTC trade, which to me just doesn't look that exciting right now. Honestly, just these highs and lows as a trigger probably work. So something like this, breaking above 26.2, remaining bid, and then playing that towards this 26.8 region. So, 26.2, 26.3, breaking outside of this 4-day value composite, remaining bid, and then seeing something squirt up there, and then looking to this level for either bull or bear control. So either you see some kind of absorption up here, or longs get trapped through that pocket, or if we just see that this continues to remain bid, or if we continue to drift into this low, because again, this is a really clean composite. I could see this offering some kind of breakdown short into this gap, or clearing that gap out. So back down again towards 25. It is risky, right, to short into this, but yeah, I think that we're going to get lower prices anyway. I think this move was significant in terms of open interest and positioning, but I don't think it's the kind that just really mean reverts and does like a V reversal. I think things like this they have a couple days of chop, and then we see another leg. Let me just look at the chat real quick. I mean, at least on the lower time frames, there are some things worth noting. There is a good amount of absorption. Like if you look at CVDs, if we look at spot CVDs, if we look at future CVDs, they are continuing to move down. Besides this brief period where we had that upward shift in spot CVD and price didn't really do anything, so there's still absorption above. Overall, these are moving down, and price is not continuing to move down, right? Unless you look at Binance BTC USD only chart, which is actually still drifting lower. So price is holding firmly here. If we look at something like just order book depth on the spot market, for example, we'll go to like Binance spot market, Coinbase, and this is just like bid-ask ratio, showing which side is showing strength. And this will change based on depth. This should be set to 2% or 2.5. So we look at the Binance spot market. If we look at Coinbase, it's kind of the same thing. So there is a good amount of strength there in terms of a spot bid. But that doesn't necessarily mean that we can't continue to move lower, because you can see periods where you've had that before regardless, and price continues to dip down. But this does look strong right here. So yeah, I mean, it's tough. I definitely wouldn't want to get into any positions right here. My points about lower prices is just, I think that again, we have some catalysts that are further out. And I think that the market is showing signs of a loss of momentum and weakness, and legacy markets as well are definitely not as helpful unless we see a big change in legacy markets where, they continue to bound upward. And the risk environment is supportive. One sec. Let me just look through the chat. So to reiterate, 4-day composite has formed. I mean, it's a 5-day if you use this going back to the 18th, which is reasonable. So a balance area is formed that's tight enough to take a position around. Yeah, I know TRDR is good. I used to use TRDR. Let's see. Yeah. So Friendtech. I mean, listen, cool concept, really clunky platform. I know you can't expect too much at the first iteration of something. Um, there's definitely better ways to do it. I think that you're going to see that, or attempts at that at least, be made where competitors will come out. I don't know if it'll be. I don't. It's tough because first mover has an advantage a lot of the times in this market. Um, but it is clunky as it is right now. It's. I think it's dangerous, honestly, because it is basically turning influencers into securities. And the way they get their price to go up is what looks like, for the most part, people are just giving their chats financial advice. Very specific financial advice, too, because that's a difference. That's one of the more important distinctions. Like if you have a newsletter, you can't necessarily get in trouble for sharing your stock ideas because it's not specific to one person, right? You're sending it out to 1,000 people, okay? Whereas the chat, even though you could see as the person who has the token, as the person who's being traded, you could see everybody's question. They can't see everybody else's. So you're technically talking to individuals, and you're, for the most part, people just using it as a paid group, right? Sharing trading ideas, sharing market in opinions and insights. And I think that that's just really, I don't know, that's seems like a really dangerous line to walk. Again, it's a really cool concept. I don't, do I see a bunch of celebrities getting behind it? No, I mean, they would hire a team, obviously, to respond to messages. But as it is right now, I made a decent amount of money from it. So in a day and a half, I made $3,500 in fees. It's a huge rake, though, for someone to trade, right? I mean, the fee alone is ridiculous. But I donated mine to the Maui Relief. I don't want any part of that money. I don't want any part of the SEC. Let's see. Do I think the next bull market will be weaker? No, I just think it'll be different. I think the expectation that BTC is gonna, I don't think there's actually this expectation because I think most people are pretty reasonable in that they know BTC isn't going to return like it used to. I think maybe a 2-3x is reasonable, but I think it's even dangerous to just assume that you're guaranteed continuation of this pattern. Again, that's why I say macro is important. Yeah, my opinion on open interest is that normally this kind of drop in open interest would have me getting into position. So my point is that this is the kind of drop in open interest that normally I would fade. So a lot of the times I talk about, and this is open interest right now in terms of dollar value, right? But that's going to change whether or not price is going up or down. There's a lot of times where I talk about just 10K BTC worth of open interest changes being good enough to enter in and out of positions around. Whether that is like a bunch of longs building up, 10K worth of longs or 10K worth of shorts. And this was 260 down to, this was, 60K plus BTC off the game board. So, I mean, you would think like this is one of the biggest wipes. Yeah, so this would be one of the best buying opportunities. But I think that after that low volatility period like we had, I think it's just a little bit questionable for me, at least for my system. And I think that it's just the high time frame chart right now, to me, says that we have longer to go before any kind of bull market arrives, and that it would be very difficult for us to just trade within this sort of 25 to 30K region up until the next major catalyst or, up until the next bull market. So I think it would be very difficult for us to maintain this level. Especially, again, we're talking under the context of equities also have been experiencing pain and whether or not they will continue to experience pain. So if we continue to see pain on that side of things, then yeah, I think that it's reasonable to honestly just like break prices up. Look at, you had this kind of range formed under, moved back through, retesting the high of that structure. So if we're trading back, that's kind of ugly. Let me redo that. So range, breakdown, fail to continue, trap setup, trade back through, retest, breakout, underside retest, And now we're retesting it again. So if we were going to accept back below 25, I think that you could just kind of extend. I don't want to scare anybody. I think you kind of just extend this forward and just expect something that over time trades more thoroughly back through this region. I mean, if we look at the ES, this was a really strong move out of what was, again, almost a year-long range that we were within. You know, breaking through 42. We talked about 42 for the longest time during streams on Twitter. So we haven't had any kind of retest of that major level yet. So around 42.50, honestly, is where I would look for that. And we're just beginning to see that, you know, this market has, this is going on a month now, but I had made the call going back. My call, honestly, was basically at the top. And again, pat myself on the back, but also saying in the same breath that there's many times where the shit does not work out as I expect. So whether or not this continues to move sideways and we enter in sort of like into the great chop period remains to be seen. And if that happens, I think that, again, just expect the BTC does more or less the same. I don't think that we're looking at this from the looks of it now, just continuing up and taking out these all-time highs. And by the looks of it, if we ended up doing that, I think that we would reject again and that this has longer to go as well. What the hell's going on? So I think you could break this down sort of like this, right? High, mid, low, and let's hopefully not revisit that low. But there were a lot of signs here that this was beginning to cool off. I mean, Apple earnings were not good. You had momentum indicators beginning to show signs of weakness. Momentum alone and price action, you could tell, was showing signs of weakness. Rates on the move back up. So again, people were just, I think, a little bit blinded by high prices for a little while. And I think that historically, you know, the months of the end of October into September, we could expect some trouble. And then you have the more significant OPEX dates that line up too. So I think we're due for a little bit of discomfort. Yeah, I could kind of see, so I could basically see this happening. Oh, look, the low is holding. You know, it's a strong sign of demand, big wipe in OI. Oh, what happened? Hold on a second. You know, big wipe in OI, all of that. Let me move this so I can get back to this. What the fuck is going on? Hold on. So this, oh, I forgot to draw this. There we go. Same dump down to this level. Oh, this level's holding. And then we end up spiking that like that. And this is what I meant to show. Not nearly the same amount of wipe in OI, obviously, but a big wipe nevertheless. So I think you have to have your guard up for something similar, honestly. Like the level looking like it's good, but again, this was this really low volatility chop. A move after that, it's like just the concept of, you know, after you have a range that's formed for a really long time and price expands outside of that, like you should never really fade the first leg. I get that it's complicated though, because the first leg is a leg that is, you know, a ridiculous shift in positioning in terms of OI and liquidations, and then it's also into, you know, what should reasonably be high time frame support. This one I'm just going to sit out though. I'm not going to buy this dip right here. I'd much rather buy into strong markets and rising markets, and this is just showing weakness. I think the expectation is that NVIDIA comes in weaker. I mean, we should actually just look at that. So, so the estimated earnings per share, 2.09. So the estimations are that it'll be higher. I think it's reasonable that they've obviously risen over time between last earnings, but whether or not the growth is on the same sort of continued trajectory or not. And I'm not I'm not someone who's like adept or like well versed in earnings and stock fundamentals. So I can't talk about Nvidia in detail. So TLT. Yields up today. Gold off the highs. I think, you have to, the same way with, as I mentioned earlier with BTC, if you start seeing some kind of change in target inflation rate, BTC and gold will be something worth looking at immediately. That was crude oil. Sorry about that. So yeah, I mean, do I think that anything like that's going to happen this Friday when he talks? No, but now I don't trade gold. Some people who trade crypto do, but you don't have to be a genius to see this is back at high time frame support, but did kind of a view reversal back there. And you have this more or less gap sitting below 19. Gold can continue to range and move sideways though for a really long time. So I wouldn't get overly bearish on this return to this level. One other thing that does stand out about something like the ES is just this absolute air pocket. So again, these are quarterly profiles. And we'll put on that yearly VWAP for this too. I don't know why that's not popping up now. Who knows? This air pocket. So that is, you could look between the profile at 43.30 down to 43. Just an area where price can move very quickly through. So, I mean, you want to see that these, you begin to, if you're bullish, you want to see, or you're a bull for crypto and for legacy, you want to see the S&P really begin to base out around here. Because if we start accepting below something like Friday's low, this is going to fill out pretty quickly. There's really nothing there. Which wouldn't be bad, because that brings us back down to the most significant level on the chart in the last, I'd say, 2 years, which is right around 42.50. It's more like 42, but it was a 9-week long, or it was what's it called? Yeah, no, we have 1, 2, 3, 4 quarters of overlap of value. So it's a really sticky area potentially. What's it called? When I look at shitcoins, I don't use too much in terms of some of the stuff you see me use trading legacy and trading BTC. A chart, CVD. I don't really use a profile, but I wasn't, I use profile if I was intraday trading shitcoins. But a lot of the times when I'm trading shitcoins, it's more or less if there's momentum. And, there's been periods, though, in the last couple of weeks where BTC hasn't done anything, and I've actually just been scalping some alts here and there. But that was specifically coins that were I was using this, honestly. That was like Blaze and what else was it for a while? What was it? YGG and some of the other coins that were market made by DFW. Trying to think of what else it was. I got them off my list now. It might have been LPT was one of them. They were trading at like the funding rate was 2%. And yeah, there was just a ton of hedging taking place and then offloading in the spot market. And I was just looking at, honestly, the order book on Bybit to sort of get the signals for those trades. But you could use the same tools. Like if your goal is to just trade alts, you could use the same tools you use for BTC, or that I've been using. I mean, if I'm trading legacy, this is the view of that. So completely different. But I think that, I think you'd use these tools trading alts as well if you have the access to them. But there's just a lot of sort of segmentation or fragmentation in platforms that offer these things and what they connect to, and whether or not you could trade on those exchanges. And it's not one product for all yet. I don't know, guys. Probably gonna wrap it up. I just wanted to cover BTC, talk about a few things. That was Jigsaw. Yes, this is Jigsaw. Jigsaw is great. So what you're looking at right here is this is the bid-ask depth. You have pulling and stacking, so the changes to that, whether it's positive or negative, whether they're being added or removed. Then you have the volume profile for the day. We have value designated by purple, outside of value designated by this sort of teal, the point of control. And then we have sort of a footprint chart that is on the actual DOM. And a lot of times when we get to a level, what I'll do is just clear this out. And in the center, last traded price or last quantity traded, and how that adds up as well. And then this will have some coloration depending on how much momentum there is in one direction or the other. This is just pure tape reading. And then you have a footprint chart just to show you sort of a working memory of that with imbalances as well. So this is just pure order flow trading. I wouldn't say that I have an option trading workflow, honestly. I'm not a tried and true hardcore options trader. Most of my trades and options are pretty simple. I'm either taking risk reversal plays that are sort of simulating long futures or short futures positions, either bets on volatility expansion, whether it's straddle, strangle, or continuation of volatility compression, whether it's selling those. So long straddle, long strangle, or selling by being short straddles or short strangles. And honestly, it's not very sophisticated. I use Amber Data to look at the options market. Amber Data is a really professional options analytics platform. It's quite expensive if you're trying to gain access to it, but you could use something like Velo as well. And then I'll look at skews. I'll look at implied volatility relative to realized volatility. I'll look at 25 delta skew. So I've gone over this stuff in the past. I'm not going to go over it right now and at the end of the stream. But yeah, I'm probably going to tie this up, guys. Yeah, F90 for the win. Mine's done. I'm done touching mine. I have RW carbon all around the car now. I have Vossen rims on it that are awesome. I love them. They really complemented the black everywhere. The all black rims, satin black, and then I have full tune and AWE track exhaust. So that'll be it, though, guys. I'm gonna wrap it up. I gotta pee, and I appreciate you guys for turning out. I'm going to be back on this consistently right after Labor Day. So we'll get back to at least doing 2 days a week. I know I always say I'm going to do more, but at least I could get 2 days a week in. And yeah, be sure to check out those links below. Check out SyncQuote, because in the next, again, I won't reveal what's coming out, but there's some really useful tools on this. So for example, instead of actually having to structure trades, there's going to be more of what you're looking at right here. So, for example, if you wanted to place if you wanted to open, some kind of bull call spread, by either, we'll say, for example, you have a view on BTC moving up, but you're not just going to be buying a call. You're going to be buying a call, and then you're going to be selling a further out of the money call to sort of finance that long call that you're in. This is a trade that you can place right through this, right? But it's been, how do I put this? I have to pee so bad I can't even think right now. This has been simplified so that you could just click into this, right? And select that strategy and then choose your prices, etc. There'll be more things like this that are going to be helpful for you to either trade volatility expansion or to place the trades that a lot of people benefited from up until recently, which was just shorting volatility. So keep an eye on this platform. There's a lot more to come. Again, I hate saying things like that without being able to say what it is, but got to keep a tight lid on these things. All right, guys, that'll be it. Enjoy the rest of your evening. Thanks for tuning out, and enjoy the rest of the summer.